As we think about our future, investing our money is a big part of planning for our families and for our retirement.
And about a month ago, we introduced you to Solomon's plan for investing. Today, we want to welcome back John Wierenga, owner of Wierenga Asset Management, to talk about what they can do to help you. And like many individuals who have 401ks and seen them go up and down, for instance, 2008 and 2009, my 401k went to a 201k. So you have a very good financial strategy that may really kind of thwart that up and down in your, at least in your financial regime.
Yes. Yeah, what we've done is we have, of course, during that period, especially in 2008, 2009, we had clients come in, seasoned investors come in, and they were scared. They were just looking to put their money anywhere just to protect the value. And there wasn't much faith in a lot of traditional investments like U.S. Treasuries or even banks at the time. And but in 2007, I began to look at another strategy, and it's based on what Solomon wrote in the book of Ecclesiastes. And he wrote this. He said, divide your portion to 7 or possibly 8, for you do not know what misfortune may occur on the earth. And during the 2000s, whether it was 9/11 or the war in Iraq or hurricanes or the great financial crisis, and it was great. And we saw a lot of misfortunes. And so what we developed is a unique portfolio with a strategy to allocate into non-traditional investments.
And so walk us through, these are the 7 really primary categories that you analyze and walk people through. And this is if they're all equally divided, all of your portions are equally divided. We start out with equities here. The equities mean what? Equities
is stocks.
Okay.
And so we have a basket of individual stocks, companies like Costco and Schmucker's Jam and ExxonMobil.
Apple, maybe, all those that are traded.
Right, and we choose those on an active side, but we also have a basket of ETFs, which are a lot like a mutual fund, and trade like stocks, which are more tax efficient and more economical in their trading and management. So that's the equity piece. Fixed income is treasuries, and treasuries and or bonds in general.
Okay.
Corporate bonds and U.S. treasuries and international bonds, and then those are the traditional, and cash are usually the traditional ones that most people see in their portfolios.
And then you have currencies, precious metals. That would, the precious metal, we're talking gold and silver and some of the others that really have over the last couple of years become almost overperformers.
Yes.
In people's portfolios. But you walk through things like raw materials. Would that be oil?
Yes.
Okay.
Yep. Coal.
Okay.
Natural gas. Gasoline.
And then real estate. And I see, when you take a look at that, kind of those portions doled out like that, you see, I mean, even in the last 5 years, if you were heavily into real estate and had nothing else, chances are you probably have lost everything, or at least have seen everything reduce significantly in value.
Yeah. Yeah, just by looking at the Solomon 7 there, just comparing to my 401k, there's so many more options to protect you, it seems like.
Yes, what we're trying to do is we're trying to minimize this. And from 2000 all the way up to 2009, your portfolio has done this.
And mostly on the smaller end.
And so Solomon's plan, by allocating into those non-traditional sectors, when there is a lot of panic and fear in the market, the money is going to move somewhere. And traditionally, not as a rule, but traditionally it will move to areas of the market that are more of a safe haven, like precious metals. And so what we've done is we've not only allocated to those 7 portions, but we also have several different profiles. And so whether you're younger and saving for retirement, you're going to want to be more aggressive in that portfolio.
Are there different strategies that maybe you would adopt in the allocation of those 7 or 8 categories, depending on our age and maybe stage in life? Here we see it very conservative. I'm guessing this would be people maybe nearing retirement?
Yes, that is either at retirement or very close to retirement.
So the biggest portions of the pie here are
still equities, so there's still about 25 to 28% in stocks or equities, because again, historically, equities have proven to be your best hedge against inflation. And that's retirees' biggest threat, is inflation, the cost of living continuing to go up. And that second large piece there is fixed income or bonds.
Okay.
And so that and then the other 7 are equally moved into those non-traditional or precious metals and currencies and so on.
Now, I just made it into my 40s, so I would imagine that I'm kind of in the moderate sector, maybe 20 plus years before retirement.
Yes, if you're specifically talking about your 401k, you may want to even be a little more aggressive. But if it's a pool of money for, let's say, your children's education, they're younger, it looks like, you know, they're 10 years out before they'll have to start to use that to pay for college, then you're going to be probably a little more moderate. And a lot of it depends on a person's experience and knowledge and their comfortable, where they're comfortable in allocating that.
And then if somebody was going to be more aggressive, maybe somebody just starting out, their 20s, their 30s, perhaps no kids, they've got a long time to save up for retirement, this would be the strategy. It looks like you're heavy into the stock market here.
Yes, still quite heavily allocated into the equity portion, and but yet we have those other areas to protect that downside. And as you mentioned, Terry, we saw a lot of growth from, of course, like precious metals over the last couple of years. So it really depends. Whenever an investor has a pool of money, the best advice I can give them is determine what is that money going to be used for. Once you determine what that money is going to be used for, retirement, kids' education, or if it's, well, it's my rainy day fund, and if my refrigerator dies or something like that, this is, you know, not for that. It's going to be in cash or savings.
Let's say, for instance, myself, we just have a 401k now for retirement. You mentioned the pool fund. Would you recommend maybe taking some of that out and investing in the Solomon's plan? Or are you looking at separate assets to bring into it?
Generally, it's separate assets.
Okay.
While you're employed at an employer, you generally need to keep those with that employer plan.
Plus there's matching and so forth.
Right. You want to maximize that, the tax deductibility of those contributions. But if you've had an old retirement plan that you've left an employer, a 401k or something like that, then this would be a good choice for that. And so what we would do then in your case is, let's say you had an old retirement plan out there and your 401k, they're really two vehicles that are going to the same destination as retirement. So we'd look at your 401k and say, well, you've got some good choices here in this equity option and so forth. Let's match that or balance what we choose in Solomon's plan to make sure you've got overall balance in your portfolio.
And that's where maybe IRAs and some of those other options maybe can come along as well. You have such a tremendous wealth of experience and great information here. You want to make it easy for our viewers who may just want an initial examination of what their portfolio is right now, and you're offering a really great program for our viewers.
Yes, if you call our office and or you go to solomonsplan.com and request information there, and if you do that before the end of this week, we will offer a free portfolio review, and that's normally a $150 value. But we again, you're not under any obligation, but we'd offer that review. Sit down with us, and we'll take a look at where you've been and where you want to go.
Well, that's fantastic. Thank you so much for coming and making it at least a little bit of a simplification of this and really explaining and underscoring why we all, especially in the marketplace today, we really need to be diversified in a smart way.
Yes, we do.
Thank you so much.
20 years of experience.
Thank you.
Thank you.
We'll be right back.
This is 8 West.